Good day, ladies and gentlemen. This is Watson Michael here. And once again, we are honored to have Sean Kidney, a recurring guest, alright? So, he's one of the men who has been to the central to the growth of a 7 trillion sustainable bond industry that's keeping on growing and growing. He's the co-founder and CEO of Climate Bonds Initiative that has been doing phenomenal work beyond explanations towards sustainability. Also, he's a professor in practice at SOS University of London and he's on several other boards. Sean, welcome. How are you doing?
Hey, Watson. Thanks for having me.
It's an absolute honor to have you back, Sean. Great. So, the Climate Bonds Initiative has been doing some interesting things in Latin America and Asia. So, let's start with the regions where the updates have been taking place. And I think recently Japan and Singapore also was there. So, yep.
Well, do you want me to talk about what we've been doing? I guess, Watson. And
Absolutely.
in a sense,
Absolutely. Yes.
all we're really doing, and let's keep it simple, is trying to match the need, the wants, the necessities of investors, asset owners, and fund managers that are large scale, with opportunities to do something about addressing those needs. Look, everyone who's a large scale investor in this area gets that we've got some risks coming through. The risks are very severe for their long-term portfolio management. But the short-term stuff is hard to make work. And so they want to have some way of biasing their portfolio towards things that address the long term, climate impacts, for example, and at the same time meet their short term risk yield requirements. And that's what green and sustainable bonds are at the end of the day. And we've been everywhere we go around the world, people want to know more about this because it's a way of addressing a challenge they have. And that's everywhere from Brazil to Japan to Canada to Singapore. And that's and we're working all around the world in that place. So in Latin America, we've supported a whole lot of people with bond issuance. There's a real growth in there. We have an ongoing partnership with the Inter-American Development Bank and other development banks to grow the market and to mobilize capital for solutions. We are working in multiple countries on taxonomies, guidance for regulators. We talk to central banks. The central bank in Brazil, for example, has done some superb work, really good work on risk management in terms of climate impacts and sustainable agriculture, supporting sustainable agriculture. We work with stock exchanges like the Bolsa Americana based in Panama and Peru and so on is one of our partners. So that's just Latin America. We had our Latin American conference recently in the Dominican Republic, which I have to say was a real joy of a discovery for me. I hadn't been there before. It's got some beautiful coastal beaches and resorts and so on up in the northern part of the island, which rival anything in Sri Lanka, although you may not agree. Um, so, I mean, it's a fantastic area to work in. There were so many enthusiastic, committed, and impressive people in the area that we get a chance to work with. In Brazil, we've got a Brazilian Investment Council, which is made up of a whole lot of the largest investors in the country, looking at how they can support the change, the transition, and so on and so on. So, it's moving ahead. Nowhere in the world are things moving ahead fast enough in terms of in relation to the challenge, as in capital moving fast enough to the right kinds of areas. And in all these areas, we need the support of policy and government to enable the change. But the good news is in Brazil, we operate under an MOU with the Ministry of Agriculture to support sustainable agriculture in Brazil. We've worked closely with the Ministry of Finance and the Ministry of Infrastructure. We're working with institutions in Colombia, in Mexico, and so on all these sorts of things. Governments appreciate they've got a challenge. They're trying to do something about it. Of course, they, like investors, have to match short term with long term needs. I mean, specifically, they've all got how do you create jobs? How do you create wealth? And how do you create health systems and welfare systems whilst also addressing climate change or long-term risks to their economies and so on. Everyone's got these problems, and that's part of what we're trying to support them with, including with this framework on climate resilience, which is about understanding the extent to which development and wealth creation is essential to surviving the crazy 21st century that we're about to start experiencing of volatility because of climate impacts. Look, it's a what can I say? It's so cool to have the chance to work with people in all of these countries, and I'm more, I'm just an outsider, really. We have teams in all these countries working them. It's locals working with locals, and that's the same story in the other countries you mentioned.
Great, it's interesting. Okay, so I totally agree with you. Okay, but as for the beaches in Sri Lanka, well, there is a transformation. So, right. Okay, so data centers are increasing, and enormous amounts of energy is needed to power those. The AI infrastructure is increasing at a pace like never seen before. How can clean energy help it?
Look, at the moment, when with AI data centers, vast growth, there is a terrible habit of looking to the past for solutions, not looking to the future. Oh, we need energy quickly, build gas plants, which is what's happening in the US. There are two difficulties there. I mean, one is there's a terrible impact on emissions. Gas plants and are not emissions free, plus the supply of gas is full of emissions leakage, methane leakage. So it's a bit of a disaster. If you're using, for example, American fracking gas in Ohio plant that Elon Musk is building, your footprint in terms of emissions is much the same as a coal-fired power station because of the leakage rates we see in the Permian Basin gas and places like that in Texas. So yes, that part of it's a disaster. But remember that gas plants, there's a worldwide shortage of turbines anyway, about a 7-year wait unless you manage to buy your way to the top of the pile. So it's not a quick fix. A quicker fix is solar and renewables if you can do it. You can, if unless you're refusing to buy Chinese solar panels, such as in the US, then you can build a large scale solar plant in, say, in the Egyptian desert in 6 months to fuel a data center. So it's a much faster way of doing it. And the costs of solar now around the world are equal or cheaper than fossil fuel gas in practice. The main challenge is grids and transmission lines, which is also a challenge for gas plants as well. But it's a bigger problem because you can concentrate gas plants around an AI data center, whereas solar plants take up more space, so you tend to have grids and transmission lines. This is a problem everywhere, really. In the US, again, there's a backlog of orders for transformers. China's doing better because they've got better manufacturing capability. But they're still running about 3 years behind in terms of connecting the large solar plants in Xinjiang in Western China with the centers of need in Eastern China. So they've got work to do there. Um, Having said all that, it is very clear that if you can find the land or the car parks to cover in solar cells, you can build solar much faster, and probably wind too. If you've got the permissions to build wind farms, or you're in a windy area like Hokkaido in northern Japan. And the costs are going to be highly competitive, not cheaper. But one particular twist here is what we're actually bringing into the system is large energy consumers for the system in areas where we haven't yet cracked the renewability. I mean, there's some places where renewability just dominates, right? Like Spain, for example, or Australia nowadays. It's just that ship has well and truly sailed. And by the way, remember that in last year, more than 90% of investment in electricity generation globally was clean energy. So it's kind of, guys, this is well and truly over. But there's a lump of gas coming through because of AI data centers. if we get data centers to focus on clean energy, what we really will be doing is bringing in new, big, long-term buyers of clean energy, which will actually further reduce the cost structure because of the volume procurement around clean energy and provide the impetus for fast tracking grids and transmission line rollout and so on. So we're actually looking at this now and we're thinking, you know what, this could be an incredible boon for the planet. Because one of the things we know from the last 20 years is the reason renewables have got so much cheaper is not innovation, it's been large scale procurement because it drives down the cost and improves the economics in factories. So you've got a factory in Chengdu, the largest solar panel factory in the world, which is virtually all automated, by the way. So it could be in any part of the world, spitting out solar cells at vast volume, enough to cover the whole of Sri Lanka in solar cells in a year. Um, and it's really cheap. Like they built such a large product that the per unit price, that's why solar is cheap in Sri Lanka or Pakistan in particular, where they're rolling out a lot of solar now. So if we bring in more demand, we will actually improve the economics of clean energy. So that's what we're looking at in terms of AI data centers. And we're amassing a coalition of the world's building labeling companies who are certifying data centers, investors, the large scale investors, and some of the customers, like Silicon Valley companies. I can't name them yet because we won't be making announcements till a bit later in the year of who's joined the coalition. And the idea is this coalition will drive minimum standards for AI data centers for energy, but also for water, because we need to be very efficient as usual. We need to install the right, because they use a lot of water to cool. We need to use the right kind of water circulation systems so we don't find ourselves depleting water resources in areas of, stress water, like Arizona, for example. It could be a disaster. And we need to be looking at heat. Data centers generate a lot of heat. We capture that heat and use it where we can for energy and other forms, because a lot of industrial processes need heat. If we think logically and think in it as we're planning, we can do a hell of a lot on the back of these data centers because, AI is pretty damned amazing and we are going to be using it a lot more. So I don't think, I disagree with some colleagues says stop the data centers. We need to make sure it happens. We need to make them happen in a sustainable way that can contribute to a better society. And that requires looking at all these issues, including noise, by the way, which is in a real driving some people in the US mad because you wake up in the morning and suddenly there's a data center next to you. They actually hum. Can drive you mad after a while. So we need insulation of buildings. We need location. So there's all sorts of things that we've got to do, which will also increase adoption and support. Because what we're also seeing around the world is a lot of citizens movement against data centers and saying, not here, please, at least unless you address all of these sort of things. So this will be a risk management thing. But this is going to happen in other ways in history too. With hydrogen coming through, green hydrogen, we're going to have not as extreme as data centers, but we are going to have large scale utilizations of clean energy to be able to generate hydrogen, because we've got to shift the whole of the shipping fleet of the world from bunker fuel to ammonia production generated from green hydrogen. We need to change the way the chemicals industry is run, using not methane as a feedstock, but hydrogen and fertilizers, because most fertilizer in the world at the moment is produced from gas in the Fischer-Tropsch process, and we can't afford to do that anymore. We've got to be shifting to green hydrogen, producing ammonia that produces fertilizer. So there's a lot of things that are going to be intense energy users going forward. If we design the thing properly and make sure that it addresses the need to support a grid that it delivers lower cost energy, we could see a significant speeding up of what is already a very fast change in energy generation. There we go. That's my storyline.
Fantastic, sure. I mean, like the way you explained it with AI booming, but you need data centers and everything, the way you articulated it, well, I really appreciate it. Okay, great. So now Europe's food system is under pressure. There was an interesting read on CBI's website. Subsidiary reform is an investment opportunity for Europe's agricultural transition. Could you explain that to us?
Well, look, it's very simple. The way we address climate quickly is first understand what to do. For example, gas, no, gas doesn't work as transition. We have to do other things. That's what we're doing in taxonomies around the world, which the Central Bank of Sri Lanka has one, for example. And then we preference. That is, we say, well, stuff that qualifies the shopping list for the future, which is what a taxonomy is, then becomes what we make sure we give advantage to. Very simple, really. And ideally, but that's a bit later, what isn't in the taxonomy, you know what? Maybe we shouldn't be doing it. Maybe we should stop it. But look, one step at a time, right? The first step is to preference the positive stuff. Now, wherever we've got systems of subsidies or preferences, we need to switch them. I'm not saying withdraw them. I'm saying switch them. We want farmers in Europe to still get subsidies to maintain the land, but we want to make sure those subsidies support carbon and biodiversity. So that just means changes of subsidies. We need to make sure that you're not subsidizing people for doing monocrops over large instances without any biodiversity and the wrong kind of crops. Because some crops, like maize, are not very good at fixing carbon in the soil. There are other crops, like quinoa, for example, where the Peruvian grain is really good at fixing carbon in the soil. So if you grow quinoa, you should be getting more of a subsidy. And if you grow maize, you shouldn't get any subsidy. It's not on the market. That's how we shift our agricultural industry sideways to be able to support what we've got to do, which is capture a lot of carbon and bury it in the soil. That's one of our big opportunities to be able to address the climate challenge. And as I said, while we're at it, think about measures like less pesticide, more organic fertilizer, which will allow biodiversity to survive and flourish in all of these things. We've got to think these things through and make sure our subsidies are commensurate with the world we want to go into, not the world we've come from, which has a whole lot of problems associated with it. That's all. Very simple. And that's the essence of our proposal in Europe. But of course, that applies in every country. Like India has massive subsidies to fertilizer, which keep the industry going. Great. Farmers need it. But let's look at a shift to that fertilizer. There's a great project in Andhra Pradesh where like 3 million farmers have been experimenting of using organic fertilizer. The subsidy program has been repurposed to train and support farmers to shift to organic fertilizers. The yields have gone up. They're making more money. Fantastic. So that's one option. But the other option, in the meantime, is to make sure that the fertilizer we use in India is generated from green hydrogen, not from gas coming from the Gulf, which is not coming from the Gulf right now, which is causing a bit of an existential problem in India. Well, we do have an opportunity now. Reliance and Adani have these vast plans for solar-generated green hydrogen plants in the Rajasthani and the Gujarati deserts, which will then create ammonia. And use that ammonia to create fertilizer. We can shift now. We have an option now, which we didn't have before in India, and the same all around the world. So there's so much we can do in agriculture and the supply chain needed for agriculture.
Wow, pretty practical, Sean, and it's very well articulated, right? Okay, great. So now there still seems to be some bottlenecks blocking the road to decarbonization, like geopolitics is also something to watch out for. What are your views on that?
Well, there's two geopolitical questions that you raise. The first one, of course, is there's a war going on in Iran, which is blocking the Gulf. That's not blocking decarbonisation. That is spurring decarbonisation. Any country in the world that's an importer of gas is thinking, or petrol, thinking, yikes, what's the alternative? Because prices have gone through the roof. Across ASEAN, airlines are cutting flights because they can't get out gas at any price, just not even available. So tourism is going to take a real hit this year in Asia because of the lack of flights. and that's pushing up prices for the remain flights. So we've got a real challenge with dependency on fossil fuels at the moment, especially from one central location. So the war is driving a look at different EV sales, electric vehicle sales are up everywhere. Massive increase in exports out of China in the last month. In Washington, D.C., where I was a few weeks ago, EV sales through the roof, despite the American government trying to stop them. So it's kind of happening, right? And that's not a block to decarbonisation. That's been a spur to decarbonisation. But even before that, in Pakistan, in the last 5 years, we've gone from virtually zero to 23% of all electricity generated by solar, with no role of a government and mainly cash transactions. Ordinary Punjabis actually paying cash to buy solar cells to put on their roof to make sure the power's work, because the coal-fired power stations the government built with Chinese money 10 years ago are not delivering adequately, and they happen to have blackouts and the grids aren't there and all, or they haven't worked. See, what do? You now can solve it because solar's so cheap and so available. You just buy it from a local vendor, put it in your roof, plug it in, and you don't need to connect to the grid and so on. And what's more, in Pakistan in 2024, even not even last year, a quarter of all cars sold were electric. What the hell in Pakistan? And because they are plugging them into their own solar and so on. So things are changing very quickly anyway. The Straits of Hormuz is like going to be the blockade is really a big push to any country that's an importer who's freaking out. Now, of course, every country who's an exporter is making more money now. They don't really see the need to change. They're doing really well. But I've been reading quite a lot of bits before about the high oil price of the moment is masking what you would call demand destruction. That people are looking for ways to shift really quickly. So when the price comes down, there's just not going to be many buyers. And we already have a situation where we've reached peak oil in China because more than 50% of all cars sold last year were electric. And so people are shifting. Actually, not just cars. And this is something that will frighten people in truck manufacturers in Europe and in America. 50% of all heavy-duty trucks last year in China sold were electric. I mean, whoa! Tesla hasn't even started selling this electric truck yet that announced all those years of fanfare, but it's already 50%. And you couldn't sort of see, whoa, this is going to sweep the world, right? This is something coming fast. And then you get more breakthroughs in electric vehicles. You're getting solid state batteries now being to come through the system, which will halve the weight of electric cars and double the range. So that just means oil in 2030 going to be a big problem. Demand is going to collapse, and this is underway. So look, I don't think that side of geopolitics is negatively affecting decarbonisation as a whole. Anyway, maybe in the US it's slowed. Yeah, slowed, hasn't stopped. We'll still have lower emissions at the end of Trump's presidency than at the beginning of the presidency. It just won't have declined as fast. But everywhere in the world, it's really moving very fast. But the other thing you talk about is the noise out of Washington, D.C. about climate change. The international organizations America is involved in at board level are finding American delegate insisting the word climate is removed from all documents. I mean, so it doesn't exist. Bury your head in the sand. There are ostriches that do that. Isn't that what it is? That's what they're doing at the moment all around the world. But that doesn't mean that things aren't still happening. I was up in a tower in Montreal recently, looking across the St. Lawrence River, choppy water. And I'm a kayaker. I love kayaking out in choppy water. It's fun, but you might get knocked over sometimes. It's hairy, and you can, in other words, you can win and lose in chop. But you know what? There may be a lot of chop on the top, but the currents are flowing exactly the same way. The St. Lawrence River was still flowing out to sea. In every harbour in the world, tides flow the same way. And that's what's happening in sustainable finance, because it's substantial. It's about risk management. It's about understanding the future and changing for the future. It's not about the chop on the surface that a politician tries to generate, the wind that they blow, like trying to huff and puff, which is what you get out of Washington, D.C. So I kind of don't worry about that, to be honest. And and my litmus test is speaking to investors around the world. Large investors all understand climate. They're still investing in what we'd call green solutions because they think it's an important part of their risk management tools. And green bond issuance is way down in the US. US investors are going overseas to find them now. In China, green bonds are up 50% last year. The future is China and Asia as a whole. 50% of people live in Asia. 50% of the economy now really affected in PPP is Asia. And the growth rates are in Asia at the moment. It will be Africa in the next 50 years, but we're at that stage. And that's where I worry about. That's what we have to do the work. We have to make this work for Thailand. We have to make this work for Pakistan going forward. And it is working. 50% of all cars sold in Thailand last year were electric vehicles. 50. Hey, man, things are changing.
Amazing. Yeah. So, and in the month of May, the sustainable bonds hit 7 trillion, Sean. So, what are your views about the future of green bonds and sustainable bonds?
Well, they hit 7.1 trillion,
Okay.
which I like to say is an important number because at the Paris Climate Change Conference in 2015, they were 0.1 trillion. They were 100 billion. And now we've got 7.1 trillion. That's a marker that something's happening going forward. We will see more than $1 trillion issued this year. $1 trillion is bigger than the Sri Lankan economy.
Very much.
So it's pretty substantial in terms of size. And we see continued growth, especially in Asia, as I mentioned to you, especially in Asia. Europe is the biggest market globally. It will grow, but not as fast because the economy is not growing as fast, but it will grow fast in the economy. The US, we'll see. Perhaps not green bonds, perhaps resilience bonds or blue bonds. We'll see how it goes. But in other parts of the world, this is just happening. In fact, I'm going to say the real problem is that bankers tell me, oh, look, the energy's gone out of the market. Why is that? It's got boring. You know what? My dream is to make this market boring. Because for pension funds and insurance funds, what they want are boring investments. They want huge amounts of green, safe, and secure, because their primary objective is not crazy growth, it's safe and secure, because they've got to make sure they match assets and liabilities going forward. And in fact, it's a sign of extraordinary success that we've now got what is a mainstream market. That's the benefit of getting to $7 trillion outstanding. It's become a boring market. And that's a win. That's a win. Like it's like real estate bonds, boring, yeah, and huge, and part of the growth. So that's where we are in this market. It's not any puffing and puffing wind to create chop on the harbour is not going to stop the way the currents are going.
Absolutely. So I was like, I usually check my emails most of the time, and I was like, I have subscribed to climate bonds initiatives, the newsletters, and also like, I was like, what, 7 trillion green bonds? And I was
That's
like,
right.
and I just opened it, and I was like, I immediately put a post on LinkedIn. I was like, wow, great. And I mean, it's amazing. So for all those watching, actually, you guys can go to the Climate Bonds website and put your email address and subscribe, right? And they have downloads, PDF documents, so much of free information, right? You can get that free information and you can improve your knowledge, okay? And they have a dozen more so many podcasts also are there, so it's a very valuable website. So I mean, whether you're an investor or whether you're looking to learn about green bonds, about climate change, the effects, or anything, you can go on to Climate Bonds Initiative's website and get, okay, there is so much of information there. Great. So, Sean, any final message to our viewers and listeners out there?
Look, as markets grow, and remember the market's just an indicator of change. The real issue is investments on the ground. That's what's going on. It helps because it makes it easier for capital to flow between investee and investor. But the key thing is what government policy is to support changes, at least removing the barriers which exist in lots of countries, making sure you switch your subsidies, which is a kind of barrier at the moment to the changes, towards something that is going to be future fit. And in fact, also looking at how an economy can take advantage of the changes that are well and truly underway, looking at the new economy that we're building globally and thinking, well, how does that affect my supply chain? What can I supply? What industries in where you are in Sri Lanka or in India or in Thailand or in Brazil, for that matter, are going to be most successful in the way things are changing? That's really what this is all about now. And so we do have a global conversation underway in so many countries, supported by regulators and governments who understand that things are changing, that there's a risk in doing things the old way, a major risk that needs to be addressed by doing things a new way. The past is no longer a guide to the future in the context of the climate change, the policy changes, the climate impacts, but above all, what countries like China have done in the last 20 years already to give cheap energy and change things. We need to be thinking differently. And that's where we're in the middle of, I think, globally now, wrestling at that. That is enhanced by things like the current Straits of Hormuz crisis, that turbocharges that conversation. It's enhanced by the extent of electrification that we see happening in different parts of the world, which is extraordinary opportunity if you're in the supply chain, less of an opportunity if you're producing petrol. And the biggest petrol producing economy in the world, Saudi Arabia, has a transition plan. They are working on the assumption that petrol consumption will reduce in the 2030s, and they want to be the petrol producer of choice. They're going to be a low carbon petrol producer. They're building CCS plants, carbon capture and sequestration plants, all over the place to reduce the emissions profile of the petrol. So when it comes to competition, that European, Chinese, and Japanese buyers will choose them over high carbon petrol from other places. When Saudi's thinking like that, the future, is going to be very different.
Absolutely wise words. Sean, as usual, thank you very much for explaining. I would call this a short masterclass as well. Very well articulated. So, Sean, thank you very much for taking time and doing this podcast with us.
Thank you, Watson. Thanks for the time and good luck with the podcast and all your other guests. Great work you're doing.
Thank you very much.